Well, good morning and welcome to Business Morning. Is a start of a new trading week, the last full trading week of this quarter, but global markets are anything but settled. Oil is once again commanding attention this week, with prices holding firm, amid the lingering, geopolitical tensions and supply concerns, a trend that continues to shape investor sentiment worldwide. At the same time, major stock indexes across key markets are starting the week on the back foot, extending last week's losses as uncertainty. That's weighing heavily on risk assets now and risk appetite. And definitely, I know there is that saying about March, beware the Ides of March. I guess we all witnessed it this March, especially in the markets. Well, let's flip over now. Let's talk about the commodity that's in the spotlight right now. We're seeing prices climbing again. Definitely, it's shaping up to be a tense start to the trading week. Brent crude, that's holding near recent highs, above $112 per barrel. We have $114 there, 1.63% higher this morning. As expected, most of March, kicking off the Mondays, we always see those big swings higher. Starting the week, that's for Brent crude, and definitely we know most of those traders there, this is when they try to go long in the market, but there's so much volatility, you might actually miss it. And we see WTI crude holding up there, $101.59 a barrel, a bigger 3.43% advance, and definitely it's on the back of geopolitics right now. Recent escalations there with President Trump, given a bold request at this point, telling Iranians to open the Strait of Hormuz this time, or else he's going to attack some of their energy infrastructure, and that's what's driving sentiment. The big question now is how much further could oil prices go from here? We're already hearing the drums of inflation at this point, and talking about oil prices, definitely we know the impact when it comes to. There's a relationship between oil prices and energy prices, and definitely it's a simple, straightforward relationship there. We're seeing fuel prices climbing sharply across Africa this March, and the biggest mover is Nigeria, 24 to about 47% rise. That's for the price of PMS. Then we see for the likes of Egypt, they have a 14 to about 17% increase for fuel prices. South Africa, that's just about 3%, even though they import most of their energy needs at this point, refined products and all of that. But there's more price rise expected right there in South Africa. Then Tanzania, we see for petrol about 6.2% rise, and diesel 9.8% rise. Some of these markets still have some level of subsidies in there, either partial or full subsidies, and that's why you see the price rises not so much. But looking at Nigeria here, it's a fully deregulated market. So, definitely we're seeing governments in most of these countries still trying to support their citizens to, help cushion the effects there. Then when we look at the highest global petrol pump price increase from February 23rd to March 16th, we see Nigeria leading again there, 39.5%. As globally, Laos comes in at 32.9% rise. Australia, 31.8%. Vietnam, 31.8%. The United States, about 23.6%. That's looking at the pump price increase since the war started, the escalation, and oil prices, breaking above $100 per barrel. So we're seeing the impact there, and definitely we know how this plays into the inflation story. Most of the central bankers there, they've been, close to their targets, already hitting their targets. We've seen, some countries in Africa, getting into single-digit inflation, but this is turning all of that around because this, moves the world at this point. For the lowest global petrol price increase so far, definitely South Africa comes in there about 1%, and Mexico about 0.5%. That's according to Global petrolprices.com. They track most of these prices in different countries. Moving along now, definitely we see for oil producers, we still see fuel price that's before this week. For Nigeria, we're around 88 cents. That's per liter. That's if you're pricing it in dollars, about 88 cents, still less than $1. But if you look at oil producers, we see it's lower. Their price there, the pump price is lower than Nigeria. See the likes of Egypt, about 45 cents per liter. Algeria, about 35 cents per liter. Angola, 35 cents. And Libya, that's about 2 cents per liter. So these are fellow oil producers in Africa, but their prices are much lower. Now, when we look at the West African side of things, Togo, that's about $1.19. So above $1. Most of these countries, Benin, Ghana, Cameroon, these are trading at over $1 per liter. So we see Nigeria still the cheapest, when it comes to fuel prices, still sub $1. But, looking at the recent increase, touching about 1,300 and, 300 and something to the dollar, that's per liter, definitely we're nearing $1, at this point. That's if you compare that to the last close on Wednesday. That's for the FX market. Then if you compare to the likes of Europe there, woof, look at that. It's United Kingdom, $1.87 per liter. That's for fuel. France comes in at $2.15 per liter. So we're talking over 2,000 to 3,000 naira per liter. Germany, $2.34, per liter. So these are higher, when you compare to the cost of PMS in Nigeria compared to the likes of Europe. We'll flip over now to other details there. We see that's if you look at Naira's performance now, 1,357 Naira. That was the last close. It was a holiday shortened week last week. So at this rate, looking at PMS prices now rising to about 1,350 region there. So we are nearing the $1 mark at this point, looking at the recent increases there for PMS. So the question is, what are the central bankers going to do at this point to help cushion the effect? Most of the central bankers are already doing pretty well looking at the fight against inflation, but this is turning everything on its head now, and everyone's going to be looking forward to the March inflation numbers for major economies. We'll see how the impact, has riveted through most of the economies at this point, and what the central bankers are going to do next. Are they going to have to, hike interest rates at this point? And definitely we know most of the central bankers, they try not to, raise interest rates when energy prices are high, because that's kind of counterproductive at this point. But what else do the central bankers have? We'll definitely be analyzing all of that to see what they have in their playbook to actually keep inflation and, help, most of these economies that, rely so much on these energy and, fuel, to move business and, households at this point. So much, to look out for at this point. And, looking at some countries, fuel prices don't rise immediately. All prices rise. I think likes of Kenya, they have about, 14 days or so before you start to see the impact of oil price rises on at the pumps. And, major economies also, have that cushion, for people. But right here in Nigeria, once the oil price goes up, boom, we see it straight, at the pumps. We'll see if, regulators can help us, with that, so that, because most of us don't have, we didn't plan for diesel, at these prices. Most businesses, they didn't plan for diesel at over 1,700 naira per liter. So definitely that will disrupt a lot of things. So that's something to keep in mind right there. All right, let's flip over to other matters now. See, the Nigerian Exchange Limited recorded a surge in market activity last week, even with a shortened trading window. Investors traded impressive 8.7 billion shares, worth over 267 billion naira. That's in just 3 trading days, and managed to finish up that week, that holiday shortened week, still above 200,000. And the ICT sector led the charge, accounting for more than 60% of total equity turnover by volume, driven largely by heavy trades in eTransact International PLC, FCMB Group PLC, and Wema Bank PLC. For the trading activity there, you see those deals in red, 193,000 lower compared to the previous trading week, but still, to the high side. Let's look at the top gainers Okay, looking at the banking did close in the green for that holiday shopping week, but industrial goods, in just 3 days of trading, managed to outperform there by 9.67%. That's a big one, but other sectors we track closed in the red, with oil and gas taking a big hit, 4.78%. That shouldn't be, seeing that, oil did, have a weekly gain last week, but we see a loss there about 4.78%, so that did not reflect. Then for the top gainers, John Holt there led with 25.40% advance for the week. Bois Cement PLC 21%. Wow, big gains for Bois Cement last week. Premier Paint PLC 20.62%. Flip over to the laggards of last week now. We see the likes of Ziki's Agro Allied Industry PLC, 50.58% down. Yeah, that had a monster run, but we're seeing a huge pullback there. They had some issues right there with the NGX and some of the activities there. So I guess investors are reacting to that. Presco PLC, 18.37% drop. DAC Communications PLC, 13.55%. So that was the color right there. We'll see how this final full trading week of March and the quarter actually plays out. Top trades, eTransact, FCMB Group, and Wema Bank PLC. Flip over to the fixed income market now. Nigeria's Debt Management Office, they've unveiled their March 2026 federal government bond auction calendar with a total of 750 billion naira on offer across 3 instruments. The auction that's set for March 30th features reopenings of the 2030, 2032, and 2033 bonds with settlement set for April the 1st. The issuance comes as authorities continue efforts to fund the budget and manage public debt amid the evolving, market conditions, seeing what's playing out so far. So that's the latest one. We'll definitely be looking out for maybe oversubscription or something going forward. All right, looking at the regulator side of things now, the Securities and Exchange Commission and the National Youth Service Corps have partnered to tackle the growing threat of fraudulent investment schemes among young Nigerians. Both agencies have signed a memorandum of understanding to integrate anti-Ponzi scheme education into the NYSC program, equipping corps members with the knowledge to identify and avoid illegal investments. The initiative is also aimed at boosting financial literacy nationwide, using corps members as key drivers of awareness across local communities. Yeah, we know that when there's so much talk about asset classes rising, a lot of scams also coming there trying to take advantage of people. So yeah, get educated so you don't fall into any of these Ponzi schemes. Meanwhile, Nigeria's capital market is entering a critical phase as the Securities and Exchange Commission Nigeria moves to tighten compliance with its new capital rules. The regulators giving market operators just 6 weeks to submit their recapitalization plans, a key step towards meeting newly increased capital requirements aimed at strengthening the industry. The directive comes as part of broader reforms designed to boost investor confidence, improve market resilience, and potentially trigger consolidation across the sector. With the clock now ticking, operators face mounting pressure to raise fresh capital, merge, or restructure ahead of the final compliance deadline in 2027. And we see Nigeria's power crisis costing the economy trillions of naira every year. Center for the Promotion of Private Enterprise warns that the country loses between 7 and 10 trillion naira annually due to unreliable electricity supply, with businesses and households forced to rely heavily on costly alternatives. The group says the situation is fueling inflation, weakening productivity, and putting more pressure on consumers, raising fresh concerns about the urgency of power sector reform. So much to unpack on Business Morning today, but we'll take a quick break now. When we come back, we'll look at the conflict in Iran and, even though we don't pray for war, how some African countries can actually step in to help other countries. That's in a moment. Just stay with us. Welcome back. Well, global conflicts from the Middle East to Asia aren't just headlines. They're reshaping the world economy. Supply chains are shifting, investments are being redirected, and new alliances are emerging. For Africa, this could be a rare chance to leapfrog in digital infrastructure, data sovereignty, and artificial intelligence. Now we explore how Africa can turn these crises into opportunity with Dr. Krishnan Ranganath, is the CEO of UniCloud Africa. He joins me right here in the studio. It's great to have you, sir. Good morning.
Hey, morning, Ladi, morning, Nigeria.
Yeah, it's another week.
It's another week, another Monday.
Yes, and definitely we still have it's the same scripts, from the start of March, and the war in Iran. We've been hoping, analysts, businesses, central bankers, hoping for de-escalation, but we've seen things moving the other way. Starting off today with President Trump, issuing new threats at this point to Iran. But we've been talking about artificial intelligence, data centers and all of that, but it seems the war might have an impact, when it comes to investment in all of these things, especially for a continent like Africa. We're trying to also find a way to, compete, when it comes to artificial intelligence, data centers and all of that. How much of a blow is this war to investment plans on the continent?
We need to really look at rerouting some of those investments into Africa at this given moment, because it's an unfortunate situation that has emerged, and we all thought it won't cross 1 week, but it is getting into a month, and so much has happened and so much is still happening, and it literally affected some of the major brands globally on the data center industry, which gives us, an opportunity rather to fast track the deployments of sovereign assets within Africa. This goes into data centers, cloud and local or sovereign cloud environments, networks. That reallocation of funds into the African market can really help that to build, or rather fast track the building of our own infrastructures in Africa.
Right. So how's it been, so far, looking at 2025, coming to 2026, have you seen improvements, when it comes to the investment flow into, countries like Nigeria and, other African countries?
Of course, there's an investment flow coming in, but is it in the right way or in the right speed? That is a question all about. There's a slowness. There was a slowness. It is changing. A lot of FDIs are coming into Nigeria, not limiting to tech, even other industries is coming in. And if you look at all the 54 countries, at least the top 20, 25 are getting substantial or decent level of investments onto the tech. The thing is that after having that investment coming in, the project deployments need to happen on time. So that is where a bit of gap is also there, that which we need to address. I think it is part of the human capital what we are trying to build up now.
So do you think, with what we're seeing, play out right there with the war in Iran, do you think it's somewhat opening opportunities for Africa, when it comes to, some of these investments, with data centers and artificial intelligence?
Exactly. It really opens up that terrain and that spectrum for Africa. Let's talk about even data centers. We have around 208 data centers in Africa. But
208?
208, yeah. So if you compare this to the global scale, it is nothing, because the African traffic doesn't remain in Africa. Our data stays 85% approximately abroad. So we need to bring this back, number one, at least 50% of it. Because look at the scenarios, what's happening. It's not that good to, discuss on a negative thing what is impacting millions of people. But that's a fact all about as on today. So look at that. Who is suffering? We never thought that, we will see this kind of scenarios. We are always a peaceful continent. Though we have minor issues here and there, that can be neglected. On a broader line, it's a peaceful continent and filled with real brain people. We need to take this as a chance to fast track the build and bring Africa to the front. That is what we need to do at this moment.
Right. And talking about some of these investment flows, where are they being channeled to, or where should they be channeled to exactly? When it comes to some of these investments.
IT still remains is a horizontal across all the industry. So that need to be one of the channels which we need to strengthen. Because that, if we are talking about a digital economy, that digital infrastructure has to be in-house. We can't run our digital economy based on somebody else's digital infrastructure. Well, maybe we can, adapt it maybe as a to start with or something like that, as a starting model. But you can't run it based on that. If you run based on that, the scenarios what we are talking about will affect the growth of what we are trying to do. So why should we go in that route? Correct. If the IT infrastructure improves, which indirectly means your transmission on the electricity also improves automatically. If transmission on the electricity improves, your manufacturing industry improves. Then if you put everything together, like the African Union or African continent, the free trade zone agreements, we have a real chance to get this done the right way.
Right. And, talking about reliance at this point, I guess the war is kind of reshaping how, countries, interact with other countries. We're seeing the likes of Europe now, definitely their energy sources are, heavily impacted, with, oil prices rising and, all of that oil supposed to get out of the Middle East being trapped, in there. And it shows the risk now, for a continent like Africa, having to keep our data in other countries or import, some of these services and some of these infrastructure that we need, to be sovereign, when it comes to some of this data and all of that. So what does Africa need to do now? Is there time? How do we start this whole process to make sure, we bring some of these things back into the continent? Because once there's a disruption, that means it all falls apart.
Yep.
What can we do?
See, there's a process which is going, correct? Every country is building up their own infrastructures, the digital infrastructure rather. We need to have better alignment. That is what is exactly needed at this point of time. Because it is not 54 countries. Africa is one. Let's think in that way. And if at least 50% of us, maybe around major 20 countries comes together and put these frameworks and the approach towards this in a positive way, things will change drastically. Now, if you look, let's look at data centers. The data centers are spread between 3 or 4 countries: South Africa, Kenya, Nigeria. These are the major 3 countries having highest number of data centers. I mean, I understand it, but still, look at the pitch, what exactly is happening. So can we bring it back? If you need to bring it back, we need to have the right infrastructures in place. And a lot of players are building it up. And let's build it up in a faster way. So that, and again, the countries need to incentivize people a bit, because a lot of people doesn't understand where the national sovereignty stands for and what exactly it is. So some of those enablement or make them understand what is this all about, which actually helps a lot to bring this up. And again, connecting this to the AI part of it. I mean, this is the last 1.5 years trend. Everybody is focused on AI. Are we having the right infrastructure for AI in Africa? I don't think so, honestly. We are still gaining an access to that, or we are still building it up. But what we have is an access to young minds. The mean age is around 19 to 20 in Africa. Am I correct? So if you look at that, let's look at the population. How many people can be trained on this? And with the whole scenarios going on, Africa can become a hub of highly talented people who can work on various aspects of AI. So there are 2 lines or multiple lines, I can say in that. One is, of course, on the digital infrastructure side. Second is the human capital side, which we need to take in parallel, so that our dependency on the external things is minimized. We have things, we become a self-sufficient continent. Let's put it in that way. We have everything in this continent.
Right, but it almost seems tough when you think about it, because most of the top African economies, they're having to, that's the government side of things, they're having to deal with a lot of debt at this point. We've also seen projections that debt on the continent is going to rise even more in 2026. We're seeing, like in a country like Nigeria, the government is still struggling with the energy side of things, power. We're trying to still sort out, 24-hour power. Education is still an issue. The government's attention is spread across, but it seems they don't have the funds to make this happen. They're still struggling with debt, at this point. So it almost feels like it's going to be hard to get the government to actually sort this out when it comes to some of these investment we need for, data infrastructure. So I'm wondering, what do we have here? Is it private sector who's going to do it?
It'll be, of course, it'll be a mix of private and government sector. I understand the fact you are saying, the governments are handling tough situations with debts. But, let's stop selling our resources. Let's try to sell finished products, finished goods. Let's don't sell crude. Let's sell petroleum products. Let's don't sell the basic ore items. Sell the finished products. That makes an economy thriving. If you sell the raw materials itself, how are you going to make money? It's a simple business, simple logic, correct? It applies across. So there has to be a mindset shift actually onto this, correct? Unless that happens, the governments are not going to make money. We will continue the same cycle. We will borrow to fix another loan. So this whole chain continues. So that is where the matter of self-sustainancy comes in place. And we need to really focus on that. And we need to focus heavily on that. Because nobody else is going to come into Africa and build African infrastructures. We need to put our focus on our homeland. Then it comes up.
All right. So definitely we know that there might be some investors, sitting on the sidelines, sitting on a lot of cash right now, but they don't know how to deploy it, into the sector. Just quickly, just tell us.
There are investors looking into Africa because Africa is always a long-term investment. As you rightly mentioned at the beginning, where is infrastructure, correct? We have to build it up. There are some part of it is available. So that handshake and collaboration between the existing infrastructure providers, that is number one must, so that we can showcase to the world we are not, we are not completely, we don't have anything, something like that. We have things in place. We have to put everything together. Investors are looking at Africa. A lot of foreign investments are coming into Africa. So this is the future. This is not an option anymore. Africa is not an option. It's not a chance. It's a future. It is standing in front of you. So let's make it work. So it is going back into people and people's perception. If you have the right frames or right-minded people come together, then this is doable.
All right, fantastic. Thank you so much. Definitely, I hope we can, find a handshake, public, private sector, all of us, and just, make Africa be able to compete, when it comes to that side of things with data, artificial intelligence, and all of that. Thank you so much, Dr. Krishnan Ranganath is the CEO, UniCloud Africa Limited. Thank you for starting off this volatile week with us. Thank you.
Thanks.
Fantastic. All right, let's look at some other matters now. We see Nigeria and Ireland are moving to strengthen bilateral trade and investment ties with both countries, identifying key sectors for collaboration. This comes as Ireland's Minister for Public Expenditure, Infrastructure and Digitalization. That's Jack Chambers. He visited the Lagos Chamber of Commerce and Industry for high-level talks focused on infrastructure, technology, and economic growth. Take a listen.
Nigeria and Ireland have reaffirmed their commitment to deepening bilateral trade and investment ties, with both countries identifying key sectors for strategic collaboration. This formed the focus of discussions as Ireland's youngest minister visited the Lagos Chamber of Commerce and Industry in Lagos.
Bring your education to Nigeria. Instead of sending hundreds or thousands of Nigerians overseas for education, send some few teachers and education centers to Nigeria. You can never go wrong in two things. That is on the money side, and it's also on the contribution side to educate Nigerians.
We need to find more examples where it can benefit both countries. We need to find that we can leverage the strength of both countries, because we know the strengths in Ireland and we certainly know the strengths in Nigeria. So just coming back to that point, to have the best job in Ireland and for Ireland is to have it here, because we can see the opportunities, we can see the talent, We can see the potential, and we can also see the connectivity.
Representing the Lagos State Governor, Babajide Sanwo-Olu, the Secretary to the State Government, Bimbola Salu Hundeyin, highlighted ongoing efforts to transform Lagos into a more efficient and investor-friendly economy.
Lagos is transforming into a more efficient, responsive, and forward-looking government. From landmark transport projects like the Lagos Rail Mass Transit, the Blue Line Rail, the Red Line, which has also started. We're going up to 6 different lines, purple, yellow, and green. To the expansion of our road networks, our waterways are also being expanded, and various improvements in healthcare services.
The visit aimed to strengthen economic relations while fostering dialogue around infrastructure development. Speaking during the engagement, Minister Chambers said Nigeria's large market and growing economy present strong opportunities for Irish businesses.
But also for many Irish firms who want to look to Africa. This is a country on the move that we know has positive economic growth prospects in the months and the years to come, for which we believe Irish business can really embed further here in Lagos, but also across the Nigerian market, looking to Africa more generally.
Ireland, with a strong track record in public sector reform, technology and investment facilitation, offer a valuable lesson and potential for partnership. Your Excellency, your presence here today signals a strong commitment and strengthening the tie between Nigeria's private sector and also affirm the importance of a strong institution like the Lagos Chamber of Commerce and Industry as a bridge between government policy and business reality.
As both countries explore new areas of cooperation, stakeholders say the focus will remain on building sustainable, mutually beneficial partnerships that drive growth and development.
And Minister Jack Chambers spoke to Channels Television on the sidelines of his visit to the LCCI. We talked about what to expect with trade relations and how both countries can access opportunities. Take a listen.
It's great to have you speak with Channels Television, Minister Jack Chambers. Great to have you right here. So definitely looking at your visit, it's quite interesting. You know, I expected to see a mature-looking, I don't want to use the word old, but how does it feel being the youngest, senior minister in Ireland?
I got involved in politics quite young, so I was elected first to our local council when I was 23. So I'm over 10 years in politics now and have got elected to the National Parliament when I was 25. So, I've, I suppose, engaged and worked hard in the political system over the last number of years. But youth has never been a barrier for me. I've always been positive and confident in my own ability and what I wanted to achieve in politics. And I think it's actually something Irish people embrace. They like to see a younger, dynamic cabinet, and that's what we have within the Irish government. We have a mix of youth and experience across the cabinet table.
What is Ireland hoping to, achieve with this visit? And I'm wondering why Nigeria is a priority right now.
Yeah, well, look, we've huge cultural, historic and heritage connections between our two countries. The missionaries came to Nigeria decades ago. We're a backbone of the education system here in Nigeria. And we also had early diplomatic relations established in 1960. Our Prime Minister, Sean Lamass, was here in Nigeria at that time. And we've really deep links. I think that's been only strengthened since a lot of the Nigerian community moved to Ireland and are making a really positive contribution in sport and culture, in business in Ireland. So we've a huge opportunity to, I think, nurture what was established in the past with what exists in the present. And we also share a similar economic outlook in terms of being open to trade, business and enterprise. I've been really impressed with the pro-enterprise approach here in Lagos, trying to strengthen the economy and build those foundations for economic growth in the future. And for Ireland, we're a small economy, but we're one that's strategically positioned in the European Union for Nigerian businesses to scale and grow into the European market, the single largest market in the world, which is the European Union. And that's something we think represents an opportunity for Nigerian business, but also for Irish business to look to Africa. And we think Nigeria is a really relevant epicenter for growth and for business opportunity for Irish business. And that's where there's real mutual opportunities for both countries.
Definitely, we've seen our country try to woo investors, trying to show them that Nigeria is actually open, for business. What sectors are looking attractive in Nigeria right now for you?
Well, I think there's multiple areas. Like we're seeing the ambition here today from digital and AI, for example. We're seeing the ambition in pharma and life sciences, but also the infrastructure ambition within the economy here is real. And we have huge expertise within the Irish economy who provide, many Irish businesses provide a lot of skill and experience in countries that are scaling their infrastructure in Europe and elsewhere and the Middle East. So that's an opportunity, I think, for Irish investment into Nigeria, for example. But I think both economies share that ambition to build really strong digital ecosystems, embracing AI. And that's what we're trying to do at home. And I think there's opportunities for mutual benefit as well for the future.
And definitely we have, a lot of businesses business owners actually watching this right now. I'm sure they'll be wondering how they can actually access markets in Ireland and Europe.
Well, I think it's engagements like today with the Chamber of Commerce in Lagos. It's trying to have more trade delegations from Ireland into Nigeria and from Nigeria into Ireland. And we have a very clear business proposition with our two enterprise agencies, Enterprise Ireland, who are our enterprise and innovation agency, and also the IDA, the Industrial Development Agency, who help countries who have many companies who want to scale and grow in Europe. And they have a very, very clear, simple business proposition for companies who want to grow in European context, and will hopefully deepen those engagements over the months to come in the aftermath of this week's visit.
All right, so I see your portfolio actually includes public expenditure, infrastructure, public service reform, and digitalization. So looking at Nigeria, we have a infrastructure deficit that's considered really huge right now, about $2.3 trillion, and data shows that we need about $100 billion annually to actually bridge this gap. Talk to me about funding ideas you think Nigeria should explore right now, and what Ireland could be planning to actually help Nigeria in actually bridging this gap.
Well, we have an infrastructure gap in Ireland and a deficit compared to some of our European peers of about 25%, which was our population has grown exponentially. And we haven't had that consistency of infrastructure development over decades. And I suppose we develop later than other developed economies in the European Union. But we're similarly trying to bridge that gap. So we're very clear on reform. And I think what we've been very laser-like is trying to cut a lot of the process and the red tape and the barriers to infrastructure delivery around legal reform, delivery reform, regulatory reform, for example. And I think for Nigeria, it's similar. How do you give a predictable pipeline of sectoral investment which allows the private sector to plan for that cycle of investment in your economy, similar to what we're trying to do in Ireland? So we've published sector investment plans. We've also prioritised in critical growth enabling areas in our economy. So we have not dispersed capital investment across the board. We've put most of our capital expenditure and infrastructure into critical areas in the energy system, for example, in water infrastructure, in transport infrastructure. And all of these areas are critical for growth in terms of housing supply, but also for industrial development. And prioritisation in terms of the fiscal position in terms of capital expenditure is really important, and something we were very, keen to do last year. And that's given a strong signal to the private sector about what the infrastructure life cycle in Ireland will look like in the next 5 to 10 years, so they can plan, they can invest, and they can also digitalise, so we have better efficiencies in terms of the construction sector as well.
It's great to have you speak with Channels Television, Minister Jack Chambers. Great to have you.
Privilege, and really look forward to building on the really positive visit to Nigeria. And it's wonderful to see the ambition and confidence of so many people in the country about growing the economy and really developing it for the future, and look forward to seeing that happen as well.
Thank you so much.
Thank you. Thank you.
All right, that was Minister Jack Chambers there, and definitely we'll just keep exploring more situations where these countries can actually, do better when it comes to trade. We have a trade deficit with most countries at this point. How can we balance all of that? All right, we'll take a break now. When we come back, we'll check out what's playing out in the global economy. All right, let's find out what's going on in the global economy. We have Ini John McQuarrie, and she is wearing, I'm a little colorblind, but it's kind of reddish.
We're in a red world now. It's a war world we're living in, so we have to reflect it in our
Exactly.
outfits.
The markets are red right now, except you're invested in oil, then you're doing better.
You're still glowing.
And if you're government and you're oil producer, you're getting more revenue. But have to find a way to channel that to the pumps.
Yeah, like Nigeria is getting more revenue, but the people are suffering more. I don't know if you saw the papers. Nigerians are asking for intervention from the government. But of course, the government has to be very calculated intervening.
The subsidy is not back.
Yeah, because it's a deregulated market. But there are still ways to go about it. For instance, we know that Dangote is the only refiner. Let me not say major. It's the only refinery. Domestic refiner we have in the country. Yeah, and I mean, the government can go through Dangote to help to one way or the other. Don't call it subsidy. Call it intervention.
Let's give another name.
Call it intervention. Whatever you want to call it. But I mean, it's buying petrol at least 1,332 naira for a liter. It's a big one. I mean, I know you're still able to use your perfume and look good, laddie, but it's not like that for a whole lot of Nigerians feeding themselves and their children. I know of someone whose child had to stay at home because they're not able to meet up with school fees. So it's getting squeezed. That's talking about their purchasing power. It's becoming squeezed. The basics are getting squeezed. So the people need the government at this time. I know politicians are really busy. We saw the APC governors yesterday in Lagos with the president. Yeah, where election will start in January and they're strategizing, but the people also need the attention of the government at this time.
You and I need attention, at this point, because I know the pain I feel when I buy fuel in my car. It's so painful.
Laddie, I bought petrol in my car this morning. I feel no pain. I'm good.
You feel no pain? Wow. You need for president.
You need for president, please. Good morning, everyone. Well, sorry we had to go that. It was a reality here in Nigeria, and so there's no way we can turn blind eyes to it. It's the reality that we are facing. Yes, the world is also facing it, but since we're in Nigeria, of course, we bring the perspective of Nigeria. So let's go global now. Start with expectations for the week and see some of those data that the world is expecting that will most likely determine policy decision for different countries. We start from Japan today. We're expecting the consumer price index for February, and also Singapore, the consumer prices core. Consumer prices what we're expecting. Tomorrow, Tuesday, from Eurozone, we're expecting their flash PMIs, a lot of it plus production PMI also be expected. In the United States, we expected the Q4 productivity data and also the non-farm productivity for quarter on quarter. We're coming to an end of the first quarter of 2026, so it's time to take records and know what has been happening. Of course, we know it's dominated by the United States and the President Trump's action. In the United Kingdom on Wednesday, we're expecting consumer price index, Australia key CPI, that's the consumer price index also, and in China, on Wednesday, the medium-term lending facility operation is what we're expecting. And then on Thursday, we'll go to Taiwan, where we're expecting the February employment and unemployment data. Also on Thursday, we're expecting France manufacturing business climate. And on Friday, some numbers coming there from Europe. We expect European Central Bank consumer inflation expectations, not the real numbers, on Friday. That's the expectation from the ECB, and also France unemployment benefits. Of course, you know that France is also part of the EU. And then from the US, consumer sentiment, the final one. That's what we're expecting on Friday. Now, going to the stories proper, of course, dominated by the war and consequences of the war. 2 additional Indian flag vessels carrying liquefied petroleum gas are making their way through the Strait of Hormuz. Ship tracking data shows that following a route taken by other ships approved by Iran. We know that Iran had said that, well, there are some approved countries that can use that Strait of Hormuz except the United States. Well, the Jag, Varsant, and Pine Gas, 2 India-flagged very large gas carriers that travel through northwards from the UAE coast towards Iran's Qashim and Larak Islands, and that happens early today, early Monday. And Goldman Sachs says that it's updated its Eurozone area outlook, and they're now expecting that the European Central Bank will deliver 2 rate hikes, not cuts anymore, as persistent energy-driven inflation pressures offset and weaker growth. And the move follows higher energy price assumptions amid disruptions in the Middle East. The bank said its commodities team now expects shipping through the Strait of Hormuz to remain at about 5% instead of, well, almost 90% to normal levels for 6 weeks, leading to its, they see a high energy prices for longer. Brent, of course, we've seen this morning, Ladi told you how Brent has hit $114 at this time. And talking about Europe now, their natural gas features resume gains as traders are watching the US-Iran exchange threats over the Strait of Hormuz, adding nervousness to an already volatile market. And benchmark contracts rose more than 5% in early trade, wiping out the previous session's decline. On Saturday, the United States President Donald Trump gave Iran 2-day deadline, expires today, to reopen the Hormuz or have their power plants bombed. So today is a day everyone is watching the US and watching Iran because the deadline that President Trump gave to Iran expires today. Now, in China, the state-owned refiners have begun exploring purchases of Iranian crude. After Washington allowed the sale of some, Washington allowed some of that Iranian load or crude to be loaded into tankers in an effort to limit price rises because of the Middle East war. And we've seen the impact of that. WTI, which comes from the United States, we've seen the price reduce, not surging as much as Brent. Well, representatives of National Iranian Oil Corps and traders who are acting as intermediaries have also been quietly sounding out potential buyers among these and other Asian refiners. So China is also joining the United States. Remember, the United States had to lift sanctions on Iranian oil so that they can improve their supply, and we're seeing the impact of that. Well, beyond oil, we see corn futures rose to a 2-week high as disrupted fertilizer supplies from the effective closure of the Strait of Hormuz cast doubt over the size of the upcoming U.S. crop. Well, the most active contracts rose as much as 1.1% today after U.S. President Donald Trump over the weekend threatened to escalate the war with Iran if the important trade route was not reopened within 48 hours. And the Middle East is a major fertilizer exporter, and prices for the nutrients have jumped since the outbreak of the conflict. So beyond oil, we also see fertilizer and commodities connected to it affected. Guess what? Gold is also there. Gold prices fell sharply in Asian trade today as concerns over inflation and high interest rates sought safe haven demand for bullion, even as the U.S.-Israel war is raging on. Monday's losses saw gold largely wipe out all of its gains for the year. Well, developments over the weekend, specifically U.S. President issuing that 48-hour deadline for Iran to open or reopen the Strait of Hormuz pointed to potential escalation in the conflict, especially as Tehran has warned that they are also ready to retaliate. So we saw spot gold slid 4.6% to $4,287.05 an ounce, while gold futures also dropped more than 6%. And spot gold was at its weakest level since late December. Commodities markets, South Korean stocks, they fell sharply today. Investors are viewing the Bank of Korea's new governor, Shin Hun-song, as a more hawkish pick, especially at a time like this. Well, South Korean markets were also caught in a broader sell-down in Asia amid growing concerns of a worsening conflict in the Middle East, although the Kospi was by far the worst performer in the region. The Kospi slid 5.8% to 5,409.17. I'll give you an update of that. By the close of trade, that'll be Nigeria's intraday hour, about that period, 1:30 p.m. during Business Incorporated. And away from that, Japanese companies have agreed to raise wages by more than 5% for a third consecutive year. Early results from annual labor talks showed, reflecting sustained gains in pay that policymakers see as key to fostering durable economic growth. Japan's largest labor union, Umbrella Group, says that 7 million members said its preliminary tally showed an average wage hike of 5.26% for the year. I bet Ladi would like to have this news also in his pocket, but Ladi has to hold on for just a bit. And that's all we can take for global news at this time. I'm Ini John Mekwa.
Thank you so much, Amy. And definitely, it's a volatile week to kick off this Monday. But the NGX, that's the local boss there, still trading at 201,241, holding on in positive territory. But Bitcoin down, gold down, Asia down, Europe down, U.S. futures pointing down. Bringing more updates at 1:30. Thank you for watching Business Morning. I'm Ladi Williams. Bye for now.